following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to Sean in Canada. Hey, Sean, what's going on?
Hey, Tom. How's it going, brother?
It's going great, man. How you doing?
I'm a huge fan of the show. I just found out about you guys within the last month and a half.
Okay.
And I can't believe, I'm like, where did these guys come from?
How did you find out about us?
Sometimes I'll go in the search engine and try to find some market analysis.
Okay, man. Welcome to the Tiger family. Appreciate you growling and prowling with us, man.
Yeah, man. I really appreciate you guys, and I'm just excited to watch your bid. I get a lot out of them. I really love the intros you do and the excitement and the energy, and you guys are pretty special.
Well, we get a great network, man, and there's a lot of diversity, man, and we're really lucky. Thank you so much for calling, man.
Thanks, buddy.
Thanks, Sean. Have a great one. Have a safe one.
You too, bud.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, a safe day. Let's make it a great night, and it's a TGIT, folks, because the markets are closed tomorrow. Let's make it a great one. Believe in the magic of tomorrow, and your spirits will be lifted on the wings of hope. Market-wise, let's take a look at it out here. We have the Dow Industrials down 24, NASDAQ off 6, S&P's down 6.5, gold contract down $1.20, traded at $1,222 an ounce. Silver down 5 cents at $15.22 an ounce. Platinum off $9 at $9.50 an ounce. Copper flat at $2.23 a pound. Light sweet crude flat at $39.60 a barrel. Bonds, you have the 10-year note down 10 ticks, 129 even. The 30-year bond off 29 ticks, almost a full point, 162.20. Bottom line, notes and bonds failed on price, failed on volume once again. Bottom line, bonds went lower price. Market has already rejected lower price today, wants higher price. King Dollar. What's King Dollar all about? King Dollar's up 91 ticks, 96.15. King Dollar failed on price, failed on volume, all of the above. King Dollar's going to be making its way back down into the 95 area first. It looks like it wants to go test the August 24th low, which is the 92.50 area. Euro right now is flat at 111, and the yen is trading at 112.81. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world. In the world of the S&Ps, let's take a look at them. What do you have? We go over to the SPY. We take a look at the SPY. This is what you have. Yesterday, we come down, and we come down with light volume. We do 81 million shares. 81 million is going against 134 million. Today, we open lower. We're going to do lighter than 81 million. And rejecting lower price. Bottom line, inside the S&Ps, folks, the SPY, we'll start with the SPY. SPY's at 202. That baby wants to get up into that 211 price point. If we go over to the cash S&P, what we have is this. Cash S&P today got to a low of 2022. We are at 2032. The ABC structure that this S&P cash is in right now, the price projection, a 1-to-1 ABC structure, is 2087. Your swing point from December 29th is 2081. Your larger swing up there is 2104. So I expect you're going to see that that's going to make a run up to that level. Now, what's really cool about the S&P is this. You remember the first ABC structure, the structure that we're in right now is this. The low was generated on February 24th. That's at 1891. The high is 2009 on the 4th of March. That's the A to B. The C point is 1969. We broke the B point. We did that with volume on March 11th. The first price projection, once again, is 2087. That being said, now check this out, because this very well is another ABC structure that we just lined up here. And the A point on this would be 1969. It would be the C point of the other ABC. So you get 1969. You get the high of 2000. 56. So we got, what's that, 31, 50, that's 87 points. The C could be today, 97, 107. It's beautiful because that one lines up to the 2100 area. So the correlation is pretty cool. You have one of them that's lining up to 2087, which is just over the swing high from 2081. The second one's lining up for the other swing point high of December. Bottom line, that's where I suspect we're going to be going. Now that, also keep in mind, is that still the counter trend bounce that we have here is dramatically less on volume than the way that we come down. So my take is still, you're going to get up into those levels, you'll fail at those levels, and as I've been saying for quite a while here, what you do have is this. It's too easy to look at the market and say, okay, it's just going to finish the ABC off, and that's what it's going to do. This thing's going to probably spike the highs, probably, folks, because that'll make everyone bullish in an incredible way. Gold contract. What do we have with gold? I have as gold as this. Gold's done 143,000 contracts today, and that's just what the doctor called for if you're a bull. Why? Because what we had is this. Yesterday, we came down with 266,000 contracts. We reached a low of 1215. Now, that was still lighter than how we broke topside. We had broke topside with 366,000 and 341,000. Now what we have is this. We got down to 1211 today. We have 143,000 contracts. Now you can see what happened. You contracted on volume, you rejected lower price, and your correlation is maybe, well, right now at 143, let's say 150,000 contracts going into 366,000. What does that set up? Guess what? That sets up a run for the highs once again. Those highs that we're talking about out here right now at 1287. Let's go over to the note market. When you see how these notes are trading out, and the notes and the bonds continue to basically give the best information, well, the most consistent information. What the notes did out here today, 10-year note gets to a price point of 129.15, gives it up, doesn't get over the swing high, which is 129.17. You're still in an ABC structure on the way down. The 10-year right now is at 129. That A to B equals C to D. Price projection is 126. Dollar. Now, this is the cool. They're all pretty cool, folks, but the dollar, no doubt, when you take a look at what we've done here, is screaming that it wants lower price. So the dollar index today got to a price point of $96.38. We've done 12,000 contracts. Now watch this. On Tuesday, Tuesday we did 20,000 contracts. Wednesday we did 14,000. Today we give 12,000. That is going into 30,000 contracts and 71,000 contracts. This baby is building a much larger ABC structure down. I suspect what we have here is that dollar index wants to run down to the August 24th swing low, which is 92.50. What is that going to do? That's going to send gold and the metals up into the highs and more than likely over the highs. You stay right there, folks. We'll come right back. Dow right now is flat. NASDAQ is down 4. We're going to be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. We have the Dow Industrials right now down 3. Nasdaq is flat. S&Ps are off 2.5. And as we do each and every Thursday, we have our man, Mr. Andy Heck. And don't forget, folks, Andy has an outstanding show right after my show every Tuesday and Thursday. He also has a great newsletter. The newsletter is the Technomental Commodity Report. You can test drive it right now, right here, by coming over to our website at TFNN. You go to newsletters, go to trading newsletters. You can test drive the Technomental Commodity Report. And because we're going into a long weekend, folks, it's going to be really cool. I'm going to do this 1 hour, and our man, Mr. Andy Heck's going to do the next hour. Andy Heck, what's going on?
Hey, happy holidays. How are you?
We're doing great, man. Yourself?
Good, good. Very good. Very good.
Good.
So I got a special show planned for today in honor of the holidays.
Yeah, tell us about it. Yeah.
I'm going to talk about, today is kind of an anniversary for me.
Okay.
Back in 1995, I was long a lot of silver going into Easter weekend.
Right.
And the market was closed on Friday, Saturday, Sunday, and in Europe on Monday because of Easter Monday.
Wow.
And I did a couple of things in the market on that Thursday that were really interesting. They caused a lot of price action and eventually a lot of aggravation for myself.
Yeah.
But I'm going to tell that story and talk all about it on my show today. And I'm going to also give some more anecdotes about some of the characters that I work with who were big traders who I knew back in the 80s and 90s who pushed markets around and, who Dodd-Frank would have a hell of a time with today.
And so, folks, just so you know, I mean, normally my show's 3 to 5, and Andy's normally 5 to 6. We're going to do today, I'm doing 3 to 4. Andy's going to come on right at 4. So if you're listening in your car, you'll be able to have him. Remember, though, you can always get us right on your cell phone, TFNN.com, and then hit Tiger TV, okay?
Excellent.
I can't wait to hear it, man. Because I know the story, and I love this story. Folks, this story is insane. This is like the classic that will be in books forever. Forever.
It's a great one. It's a great one. Listen, another thing, I'm going to paste it in the den right now. I have an article out on Seeking Alpha today that I think is really worth reading.
Okay.
It's called Equity Markets, Buy the Rally Now with a question mark after it.
Okay, cool.
and I put on my literary hat, and I looked at, and I basically kind of explain why I think that these markets are just pumped up and juiced up on central bank drugs right now, and that when when they get sober and the hangover appears, it's going to be really ugly for a lot of equity prices, which are overpriced here. So check out the article, and please, let the listeners out there let me know what they think.
Definitely. So give me the title again, because you can just Google this. That's the quickest way to get this, folks. Give me the title again.
It's called Equities.
Yeah.
Buy the rally now with a question mark.
Okay, so just do equities buy the rally in the Hecht Seeking Alpha, folks, and that'll come up ASAP. Awesome.
It actually got an editor's pick today. It's getting a lot of views, and it's actually a really interesting article. I used my best literary. I talk about Aldous Huxley and Brave New World and Shakespeare and Charles Dickens and all kinds of stuff. I kind of wrote a little opus there. For today.
I like it.
Yeah, it was fun. As far as the markets are concerned, holiday mode here. Precious metals coming off. I don't view this as a significant decline in the price of gold here. I've actually kind of think that, as I told you when we were together on Tuesday, that the moves in silver and platinum, which are catching up a little bit with gold over recent weeks, are positive for the sector. The close in oil, just under $40. I got to tell you,
that was
Tom,
a good close, man. Yeah,
it's a good close.
Right.
And you know what? Oil's got to put under it until this April 17th get-together between the Russians and Saudis, and the Saudis now have a reason to want higher price, and that reason is IPO and valuation for Saudi Aramco.
Right.
No
and
question.
so check this out, folks. The oil market traded as low as $38.33 and closed right at the highs. This is going to be doing another ABC up. It has high volume at 42.49, and it looks to me like 46 is game here, man. It's pretty intense.
Right. Let's take a look at sugar. Sugar has it's been sweet, baby, but today it's given a lot back. But I still think it looks okay. Yesterday, we got up to $16.75 per pound on the sugar market.
Okay.
Today, we're back down about a penny from there.
Yeah.
But the action in the sugar market has been interesting. We have some profit taking ahead of the holiday weekend here. Sugar's been interesting. Coffee also has been percolating lately.
Percolating. See that? That's you got that literary thing going big time today.
I got it going big time. But coffee put in a bearish key reversal on the daily chart yesterday, which is certainly interesting. It's following through today. Coffee might need a lot more time to brew.
You're too funny, man. That's good. I like it. I like it. Totally.
We'll see. Copper kind of a little bit off today. Cocoa's off today. We're just seeing markets correct here. I think, we got to get through this weekend. We'll see a lot. Quarter end next week,
Yeah.
Lot of action. Good quarter for commodities, Tom.
Oh, big time. And,
big time.
The dollar failed out here today. To me, what happened is they did the 4 or 5 day rally. Each day was lighter volume. Today, it couldn't even hold price. So it's like, okay, man. And what's so cool, folks, is that when you see the dollar fail, when you see bonds fail, the 10-year note and the 30-year gave back 2 points from its high, and then the market comes back. That's harmony, folks. That's harmony as to all those. I know they're doing different things, but when I put those in a basket, that's basically saying dollar down, commodities up, bonds down, market up, and as Andy said, was it going to fall apart? Yeah, I believe it's going to fall apart too, but unfortunately, it's going to get to these highs first, which is a trip.
Right. One of the really interesting things about the dollar here is the staccatic reaction we're getting from the Fed. You get the Fed come out. On March 16th, they're saying, we're not going to raise interest rates to the extent we said in December. Then this week, you got a couple of Fed governors going rogue saying, hey, we're going to, maybe we'll raise them in April. The markets don't know what to think, and that's affecting the dollar. I mean, that caused the dollar to rally here. But we have to go with the official Fed statement. And I don't know if there's any rhyme or reason. I think these central banks are backed up against the wall.
And check this out. What one of them said, folks, two of them said, is that the April deal. The probability of April, okay, is so far down, and one of the main reasons that it's so far down has to do with that there's no press conference in April. Now, I just put up, if you're watching Tiger TV, I just put up the probability in the futures markets, okay? This is what you're looking at is the future, the Fed funds rate. Now, what you're going to see, the probability of a hike, this is real money that's on this, okay? April 27th is only 8%. June, they're betting 39%. July, they're betting 51%. You know, so that's
right.
That's real money bet. You know, the biggest money too, right? The Fed fund futures.
But we got to remember the Fed promised us 3 to 4 hikes in December. You know, we're already through the first quarter. We haven't had one.
Sure.
They're starting. You know, their last. You know, you do have a very problematic Europe. You know, and Europe economically became a lot more problematic after Wednesday.
No doubt. Now listen, folks. Next hour, right? 4 to 5, right here at TFNN. Andy's taking over. He's going to walk you through not only the markets, but you want to hear this couple stories because they're amazing. You have a great one and a safe one. Look forward to the show, Andy.
Happy Easter.
Happy Easter. Care. It's a beautiful thing. Stay right there, folks. We'll come right back.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
If you're looking to discover a new financial resource and diversify your financial portfolio, consider the new Market Safe Commodity Solution CD from Everbank. This 5-year U.S. dollar-denominated CD gives you exposure to 8 equally weighted commodities, including WTI crude oil, gold, silver, copper, nickel, soybeans, corn, and sugar, in one powerful CD. With annual pricing caps of 70% per component, you could earn up to 70% upside payment at maturity if the commodities increase in value across annual pricing dates. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on this indexed CD. Don't miss out. Take advantage of this financial resource designed to grow with the times. The April 14th funding deadline is quickly approaching, so hurry over to everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once again, that's everbank.com/TFNN. This advertisement is sponsored content. Everbank is a member FDIC.
Hi, I'm Steve Rhodes, host of the Trader's Edge Heard Daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. So we have the Dow flat right now. NASDAQ is up 2. S&Ps are flat. And when you take a look at these markets, how they're set up, folks, particularly, you know, we were just talking with Mr. Andy Hecht. You take a look at that oil market. That oil market has just set up a beautiful rejection of lower price, has lighter volume. You know, we done 467,000 contracts. you have a high out here at $42.49 that has 672,000 contracts. This baby looks to me like 46 is going to be game in this market. We go take a look at our own S&Ps, whether it's the S&P, whether it's the Dow, whether it's the NASDAQ, each one of them have rejected lower price. Now, the volume, too, is going to be dramatically lighter, which is pretty cool. You know, you're going to end up today with about let's see. Well, no, we'll end up about 750, 800 million in the NYSE. And the NASDAQ, what you're going to end up with is, oh, yeah, see, the NASDAQ really low. About 1.5 billion. Right now, we're only 1.25 billion. Let's go to Max in Fort Lauderdale. Hey, Max, what's going on?
Happy Easter, Tom.
And happy Easter to you. Let's make it a great one.
Will I see you in church tomorrow?
Tomorrow, you'll see me Sunday.
Okay. Can you look at the overseas markets, please?
Sure. What would you like to look at?
The DAX.
Absolutely. So if we take a look at the DAX, what you had with the DAX out here is this. Now, unfortunately, I don't get the volume until like 8 o'clock tonight on the DAX. You came down 171 ticks, 171 points, rather. You're coming into some heavy volume, though, so I suspect the volume's going to be light, just like it's light in our market. We're coming into 118 million, and you know, I suspect that's going to be lighter volume because we haven't broken a swing point. If we go over to the FTSE, and we take a look at the FTSE, now the FTSE came down real good on price, actually. The FTSE came down 92 points. We're at 6,100. That's still coming into a monster up day of 1 billion shares. You know, so the way that they're set up, realistically, Max, I do need that volume to make sure that it was light volume. But when we have light volume, most of the time, all markets do.
Okay, thank you.
You know, okay, man, have a great one. Have a safe one. And, you know, what was important, and that's why I'm sure that Max wanted to look at that. I should have asked him specifically. But what has happened is this, is that the FTSE, let me put it back up here again so you can see this. The FTSE has been laying out at this level, trying to break higher since March 2nd. Now, it hasn't done it, okay? And, you know, it's been laying right at these levels. That being said, as long as this came back on lighter volume today, that consolidation's still in place. We go over to the DAX. Now, in that consolidation, this is what's cool. That consolidation there, folks, if in fact it does get over the 6,200 level, will not only take it up to the highs that were generated in October, but it very well could take it over those highs. If we go back and we take a look at the DAX there, what you're going to see inside the DAX is that the DAX is trading like the NASDAQ. The DAX pulled back less, still has a nice line that's trying to bust over. And that line is at the 10,000 level. And if you get that, the DAX would not, that price point wouldn't be up to the highs. It would be from the December 31st downdraft. That's how I suspect that baby would lay out. Let's go to Ron in Denver. Hey, Ron, what's going on?
Morning, Tom, or good afternoon. I just wanted to say thanks for all your information. You guys are fantastic.
Well, we appreciate you growling and prowling with us out here.
I did something considering it's going to be a long weekend.
Okay.
And so I figured, well, you might as well sell calls and let them expire next week. So I sold puts on the IBB, the biotech sector. I sold the 52.5 50s and got about 34 cents. What do you think of that strategy? They expire next Friday or next week.
I like that strategy. Okay, so this is how this works, folks, okay? He sold 52.5 and 50s. We're at 55 right now, and more than likely, what we had with the IBB today is this. You got to a lower price. You did lighter volume. You have a market that wants to go higher, and the IBB, can go to 263 to 272 in a heartbeat. So he's looking for that, of course, to just stay over the 252. And what he will get, now watch what happens here. Now this is what's really wild, which I'm sure he knows, is that because open tomorrow, what happens is he's getting 3 days of decay here. Even though there's small numbers, he's getting 3 days of decay right off the bat, which is pretty cool. You know what I mean? It won't be a lot of pennies, but it will, percentage-wise of what you just got in your account, Ron, it will be a lot percentage-wise, just over the weekend, just between now and Monday.
Yeah, anyway, I just thought I'd mention that and see what you think. Is the IBB sector look okay to you?
The IBB, well, you sold puts, right? So I mean, you don't want them to go down. The IBB wants to go up.
Puts. I want the IBB to go up.
Yeah, it is. No, that's it. The IBB is going to, my take is that the IBB wants to go to 269. It could go higher.
Okay,
so,
great.
No, I think you're at the right spot there, man. Do you know what I mean?
Okay, thanks.
Okay, man.
Appreciate it.
Have a great one, man. Have a safe one. And, you can see how, what you also want to remember is this, folks. This is so unique, okay? So you've had a market in the last 6 weeks that has ran topside in a huge way. It is a counter-trend bounce. What it had done is that it had already tested the August lows. If we put the SPY up, what you're going to see is that it tested the August lows. It did it with dramatically lighter volume. In the SPY, the August lows came in at 1.6 billion shares. We're at 182. When we tested in January, the first week we came at 1.1. So correlation is 1.1 billion against 1.6. You can see that sellers are dried up. And the reason the sellers were dried up there, folks, is that we came back too fast. Markets have to build cause to get higher or lower. When you get straight line moves, which we did in August, which we did in January on the test, which, by the way, we're doing right now, which is so cool on the way up, okay? They get tired. That's it. So on the way down in January, not enough sellers. Everyone's sold out. On the way up, guess what's going to happen? And it's happening right now. The exact same type of deal. Because if you look at it on the February 12th, the week of February 12th, we were at the low. Well, guess what? You're talking this is the 6th week. The 6th week, bottom line, I expect 7th week, you're going to be going topside once again. You're going to be trying to get into these highs. Straight line move. As we've been going up right now at the straight line move, we have been losing volume each and every week. And I suspect what you're going to have is that it's the most deviant thing a market can do. It gets up there. More than likely, what we're probably going to see is that not only that it gets up there, it's probably going to end up taking its swing point out. There's 2 separate swing points in December that it's going after. We'll see how it handles those swing points, but this thing could actually spike the highs. This is Tom O'Brien. This is TFNN. You stay right there, folks. We'll be coming right back. Dow Industrials right now are down 3. Nasdaq's flat. S&Ps are off 2.5. We're going to be right back.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com. Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage, or call our office directly at 877-518-9190. There's a limited supply, so act now. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Tom O'Brien.
Welcome back, folks. We have the Dow up 8, Nasdaq's up 1.5, S&P's are flat. And don't forget, folks, at TFNN, every Monday, Wednesday, Friday, we do live programming from 8 o'clock in the morning to 5 in the afternoon. On Tuesday and Thursday, we do live programming from 7 o'clock in the morning to 6 in the afternoon. Now, all of that programming, folks, you can get right on your cell phone. You just go to TFNN.com and hit Tiger TV. When you hit Tiger TV, you're going to see it's HD. It's amazing. You can get the charts. You get the audio. You get the video. You get all of the above. Man, Mr. Basil Chapman does a great show every trading day, 11 to 12 Eastern Standard Time. Now, Basil is also going to be doing a workshop. This workshop is going to be next Wednesday night. The workshop is for subscribers. You can test drive his newsletter right now. If you go to the front page of TFNN, you're going to see the coming 3-month outlook in the market. You hit that banner. You test drive his newsletter for 1 month, absolutely free. You come into his workshop, which is next Wednesday night. That's going to be going from 6 to 7:30. And, of course, you just heard me go through the market. Bottom line is that, guess what? This consolidation has been huge. We're coming up to the top of the consolidation. If you want to understand what Basil's looking at, check it out, folks. Basil Chapman, what's going on?
Hi, Tom. How are you?
I'm doing great, man. Yourself?
Very good, and I want to wish you and the family a happy Easter.
And you also. Thank you so much.
Thank you.
So, where are we in your holidays?
Passover comes a little later in April.
In April, okay. I should know that. Sorry. Okay.
Yeah.
So let's. What are we going to take a look at first, Basil?
Okay. So a couple of things. What I'm looking at right now is I'm showing the Dow monthly chart.
Okay.
And the reason why it is so important, why the different candles for the Dow, the S&P, the NASDAQ, the New York Stock Exchange, the Russell 2000, gold, I mean, we can just go on and on, why March's candle is going to be so important is because have a look at this chart that we're looking at right now. This is the Dow monthly chart.
Yeah.
And we've taken it's almost a year. It was May of last year that we made a top at 18,351. And we went down to the August low of 15,370, bounced, came back, bounced all the way up. In fact, it went to 17,977, just under 18,000, just under less than 350 points from the top. And then it comes all the way back, but it makes a higher low. That's the Dow at 15,450. And look at the spectacular rally that we've just had. Now, the reason why it's so important to always wait for the full candle to complete is that we've seen various Junes of certain years where about the last week of June, it looked horrible. And then suddenly there was a spectacular rally. So this could be the exact opposite. We might see some selling coming in. I don't know. We were short from our opening call subscribers, and today we got stopped out for a gain, and now we're kind of free to look at the market. differently again to see whether or not we want to go back in on the long side. And the candle here in the Dow, look at this. There's the 9-period moving average. The Dow is now at 17,500. It is less than 800 points. We're about 800 points from the all-time high and way off the bottom of the 15,500s. So far, this has been very good. Now, I know that there are a lot of technical pictures that are saying that there's going to be a very sharp sell-off and we're going to take out the 15,500s. Emotionally, I'm looking at this and I'm saying this is a very unusual move. That's why the monthly chart of March is going to be so important. But it isn't just that. In my webinar, I'm going to be looking at the socioeconomic conditions, the political conditions. What are the parallels between, I always talk about the parallels now, between the late 1920s. You'll be shocked when I break news about what's going on in cities like Brooklyn, New York, and New York City itself. Well, it's a 700% gain in the number of apartments coming in online in 2016-17. That's a huge number.
It certainly is.
Isn't that, I mean, is that a surprise? I mean, and the average rent is $3,800. I mean, that is really high.
Hey, listen, you can just go right down to South Boston, and there's a building, folks. So check this out. This is pretty intense. There's a building that they're building right now, and I know right where it is, on 4,900 square feet. Okay, it's going up 9 stories, and they're getting $1 million a floor. 4,900
I know
square
exactly
feet.
what you're talking about.
How cool is that?
And that was an area that we had nothing before, right? Nothing.
Right. It was A Street. I used to eat breakfast there. Right.
So I'm going to put this whole thing into some kind of a perspective to say the conditions that we're looking at now are really important because there are certain levels to look at that if they take it on, in other words, make it real simple. We take out the low of this month in the Dow, 16,500. That's really not a good sign at all. But in fact, if we hold very steady into April, which could be one would expect it to be a bad month. If that turns out to be a pretty decent month, that's going to mean something else. So in the big scheme of things, and here I'm going to show this chart that I showed a year ago.
We're only going to have 4 trading days left, folks, next week.
And we've only got 4, and anything can happen. But my suspicion is that I'm looking at this and I'm saying, there's some residual buying. I think that there's some floor at this particular point. And here's this Dow chart that I looked at that has the Elliott wave as well as the Chapman wave in it. And you can see that we've held very well. This is where we are right here. I've got the arrow. And that is not what you would expect. This is still wave 4 in Elliott wave, Chapman wave. All we need to get to is 18,352 to start a new monthly move to the upside. So I'm going to be discussing that. I'm going to put it into the context of clothing, the attire that we're wearing. I'm comparing it to, if you ever anyone watched Downton Abbey, this is the same scenario we're looking at here, where clothes are going to get fancier and fancier. It should be a very fascinating webinar, and it's free to subscribers.
I like it.
Fancy clothes, hats, white shoes, the works. So,
white shoes! Oh my God!
Yeah, white shoes. So this is going to be something that tries to put together a whole bunch of different avenues that one wouldn't be thinking of as part of the cultural and economic and stock market scene that we're looking at right now. So I'm really excited. I think the timing is going to be perfect for it, because comes the last day of March, which will be the day after.
Which is so cool, I know.
And
well, you're doing it Wednesday night, so you're doing it
Wednesday night.
The night before the last day. Last day of the month is the next Thursday.
Correct. So it's timely, and then of course we start April, and there are a whole bunch of conditions we can look at. A big gap down from the last day of March into the first day of April will mean something. Gapping up means this is very interesting, because the timing in all the time, looking at commodities, it's an hour and a half. Normally it's just 1 hour. Wednesday at 6 o'clock. And it's free to subscribers. Anyone's interested, they can go to the front page of TFNN and read all about it.
Right.
And
so
you get 30 days free.
You go to the front page, folks, and what you're going to see, the coming 3-month outlook in the market. You'll hit that. You get Basil's newsletter for 1 month, absolutely free. You come to the workshop. It's going to be an hour and a half. And if you can't make it to the workshop, folks, we have great technology. It'll be on your page for a full 30 days, and you can listen to it as many times as you want. Basil, you have a great weekend, safe weekend. Of course, we look forward to the show next Monday. We all get
yes.
3-day
We got a day
weekend.
off. Yeah, have a great weekend, Tom.
You too, man. Have a great one. Have a safe one. You stay right there, folks. We'll be coming right back. And bottom line, this market, folks, okay, it wants higher price. You have the Dow right now up 6, NASDAQ up 2, S&P's down 3, and that's after, it's not that the market was down big. The S&P's were, though. The S&P's were up $15. Right now, we're flat. We're going to be right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. And don't forget, folks, coming up the next hour, we are going to listen to our man, Mr. Andy Hecht. It's going to be an amazing show, folks. I happen to know at least one of the largest stories he's going to talk about silver. And this, just so I'm going to prep you a little, it is one of the largest silver trades that has ever been made, folks, okay? And he was right in the middle of it. So it's pretty exciting, really exciting. Our own markets here, this is what we have. They try to beat him down, couldn't handle it. Bottom line, you pull back 2 days, 3 days actually, well, 2 days on lighter volume. It's rejected, lower price, all of the above. More than likely, what we're going to have here is an additional ABC structure on the way up. Now, what's so cool here, folks, is this. This is pretty amazing. We are in one ABC. It looks like we're going to do a multiple ABC. And what happens is that when you do an ABC structure inside a larger ABC, your probability goes higher that you're also going to get the price projection. So what that would mean inside the SPY is that the SPY would be running up to this 211 and more than likely to over the highs that were generated out here on November 3rd. That's in the SPY. On the cash S&P, the way that it sets up is that the cash S&P would run first off to its swing point from December 29th, which is 2081, up to your next swing point, which is December 2nd, which is 2104, when the high is only 2116. So it looks to me the way this thing is setting up is that it can absolutely get up into and spike the high. And what a spike of the high means is this, is that first off you get up into the highs. As you get up into the highs, it lays there for a bit, and then at one point it's going to get up over the highs, and most of the time if it's a spike high, it'll get over the high by a good amount. And if we bring the cash S&P up here again, when I say a good amount, what I would mean is that the actual high is 2116. That baby could get up to 2122, 2123, and then intraday, and this is what's so sick, it gives it all back, and then guess what? Then the whole game starts again from the 2100 level all the way back down to the 1812 level. You know, and that correlation, what you're going to want to keep your eye on inside that correlation is how the bond market is reacting. Because what we have out here is that inside bonds, the bond market right now has failed each and every day this week. It wants lower price. Lower price, of course, is higher yield. What I expect we're going to see as the ABC structure finishes on the way down from the bonds at 126, and that's a big move down. That's 3 points on the 10-year, and that's a huge move, folks, okay? What I expect you're going to see there, though, as that goes down and finishes, what is going to happen? We're going to be finishing the ABC structure on the way up on the S&Ps, and then what you'll see is that whole correlation will flip around. The S&P is going to start heading south again, and guess what? The bonds are going to start heading north again. So doing those correlations is pretty cool. What we'll put together with that is the dollar index, okay? Because what has happened is this. What tends to happen is that as the dollar index tries to climb, what you do get is that the markets can't stand it. And the markets basically, come back down. So the dollar index itself, to me, wants to go down as 92. Now, the 92.50 is going to take a while to get there. There's no doubt about it, okay? Those correlations, though, when we put them together, are going to be pretty cool. The correlation inside the oil market is huge. And the oil market out here today, what did it do? Rejected lower price, had lighter volume, wants to go topside. You stay right there, man. Mr. Andy Heck's going to be coming up next, folks. And always remember, whatever you think about, you bring about. Whatever you focus on grows. And whatever you want in life, folks, visualize it, step into it, take ownership of it, fly with it. Have a great weekend. Have a safe weekend. You stay right there. Andy's coming right up next, folks. Wow! Go get him, folks.